Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning April 13th, 2020. Brief video for our YouTube and Twitter followers where I go over a couple of markets that have immediate and specific trade opportunities coming up this week. If they're not markets that you trade, still listen to the video because you're going to learn some trade strategies that you can apply to any market in any time frame. Before we get started, there's a couple things I want to remind you of. Number one, when I teach trade strategies, I'm teaching the real world trade strategies. I actually trade pretty successfully, unlike most people that do videos about trading and try to teach you trading. They've never actually traded successfully. So I'm in the real world of trading, both in futures and Forex, ETFs, that sort of thing. And also, I just want to remind you once again, there's a fantastic long-term report. It's available to you and anybody. No information needs to be left. You just go to this page, the link at Panic Cycles, March 28th, 2020, from our website. Is available for anybody to go to, download the written report, view the video. I think it's such important information. I want as many people as possible to view this because we have some very, very difficult times coming up in the weeks and months ahead, I believe at least, based on 120 years of bear trends, the patterns, the price relationships, and all of that. So I want you to be prepared for that. And here's the link shown on your screen, and it's right below in the information also. Okay, let's get started. Let's do everybody's favorite, one of my favorites. Let's take a look at the ES. And by the way, you like what you hear here, check out our dynamic DT reports on dynamictraders.com and share with friends, neighbors, Twitter followers, anybody that you know that trades. Hopefully they'll get some good information out of what we teach here every week as well. Okay, let's take a look at the ES. So here's why we want to take a close look at the ES as well as the other stock indexes. This is the ES daily data June contract. Number one, the daily momentums are what we call dual look back overbought. When they get dual look back overbought, that's a very high probability to complete what I call a daily high. That's a high that should be followed by 3 to 5 days sideways to down. And in this case, it's a possibility that's a much higher time frame high because it's a potential that we're completing an A, B, C correction right around the 50% retracement area. Now that alone, if you happen to be long, and you're a relatively short-term traders, a few days to a few weeks, would give reason you want to bring your stops really close to the market and consider a short trade on a reversal signal. We also have some time factors, Monday and Tuesday. These are just two of them on the daily data. I'll show you some intraday 60-minute time factors as well in a minute, but they're saying that we should complete a daily high, and again, that daily high could be an ABC corrective high by Tuesday at the latest. So we got maybe 1 or 2 more days up. We're right near significant price resistance. That's typical resistance, and as you'll see in a minute, other price relationships. So if you're long the ES, get those stops trailing really close to the market, and then prepare for a short trade that should last several days. Here's the 60-minute data, and again, coming up from the April 2nd low, which it was that wave B low that I was showing on the daily chart. Again, Elliott wave terms 1, 2, 3, 4, 5, and wave 5. It looks like it's subdividing 1, 2, 3, 4, 5. So we've got really 3 time frames of pattern. We've got 3 time frames of price that are all telling us between 27.85 and about 28.30 is the ideal target zone to complete this end of wave 5 high. So we may go up more, we may not, but we've got everything in place within the next 2 trading days to complete at least a daily high, which may be even more significant. So just be aware of that. There's whatever trade strategies you use to identify reversals, is you want to initiate those early next week to complete a top and go short. We've got some specific strategies we've outlined in a special trade strategy tutorial for our subscribers, and that itself was almost a 30-minute tutorial on 3 different market trade strategies for early next week. But for our purposes here in this brief video, just be aware, probable daily high going to be complete by Tuesday. This is what we call the dynamic time projection report in my DT software program that I developed years ago. But it's showing that the ideal time to complete this wave 5 high would be Monday, and preferably Monday late afternoon. So we've got just a wealth on and this would be the end of wave 5 time target zone by Monday afternoon. That would be ideal. So with dailies on Monday and Tuesday, the intraday is pointing to Monday afternoon. Again, just the first thing on Monday is we get a reversal signal that indicates a top. We're probably going to have a top that's going to last several days with the potential of several weeks. Before we take a look at oil and the setup that's coming up this week, at least it looks like really ideal setup this week is, again, if you want to be kept up to date daily on the position of many of these financial markets and a few of the commodity markets, check out our DT reports. It's an ongoing education and an ongoing trade alert. Here's crude. Crude made a weekly low about 3 weeks ago, right on schedule, actually, right the week ending March 20th, which is when we were anticipating that low would be made. It was a week later before he made the dual look-back weekly momentum bull reversal. And that's real reliable to indicate we made a weekly low. And given the potential for a 5-wave decline, again, that's Elliott wave terms, that has completed, this means that this decline is complete, this weekly momentum bull reversal had some significance to it. The momentums are still bullish. They're not overbought. That indicates, and it's very reliable, we've got another 2 to 3 weeks of sideways to up. So all that said, what we have to do is identify specific trade strategy with very low capital exposure to enter on the trade. So if you're not already crude, or if you're not already long crude, here's a setup that's probably going to come this week. Is we probably completed what we call a daily high on Friday. Pretty much right on schedule, what we anticipated, even though we'd made daily momentum bear reversals a couple days before. And excuse me, that's not Friday, that's Thursday. A couple of days before, we had no report. More than likely, crude would make at least a new intraday high to complete this pattern up in a 5-wave pattern before it started its correction, sideways to down for 3 to 5 days. Well, that's exactly what it did on Thursday. Our daily momentums do look back bearish, very reliable to indicate there's another at least 2 to 3 days sideways to down. And it should really be up to 3 days, 3 to 5 days or sideways to down based on recent cycles. And that would be anytime between Wednesday and Friday. So what we're going to be looking at from the middle to the end of next week is the next daily momentum bull reversal, as long as it's made with crude not having closed below the April 1st closing low at 23.74 on the June contract. That is going to be a dual time frame setup to continue the bull trend. So whatever momentum reversal indicator that you use, or price pattern reversal, whatever you use to identify reversals in the next ideally between Wednesday and Friday, if we make one of those, that will be a setup to continue this bull trend. And plus the news is out that the petroleum states and countries are getting together to start restrict the pumping of oil, restrict the supply to get that price back up. And so technically, if we didn't even have that news, we'd say more than likely we're within 2 or 3 days of resuming the bull trend. And just because of that news, more than likely, fundamentally, is the market's going to get some buying coming into the market and some price stability and price advance. So, boy, take advantage of that in the next 2 or 3 days. That setup will happen. It'll be a great setup for a long trade with minimal capital exposure. Again, I don't forecast here. I identify trade setups with a high probability outcome and minimal capital exposure to take advantage. And with crude, you can use futures, you can use options, you can use ETFs. We have recommendations in our DT trade alerts for crude on using ETF, the USO ETF. So that's it for today. I hope you'll join us at Dynamic Traders Group. We got a lot of good information for you and education in the weeks and months ahead, very reasonably priced. And we're going to have some real fireworks coming up here in the weeks and months ahead. And I hope you take advantage of that. Take care. Miner here, over and out. Talk to you next week.